Nvidia was my biggest winner in 2024. I made just over $20,000 in profit. How did I do it? Very simple. Over the last 4 years, I bought Nvidia 7 times. It wasn't exactly a consistent buy every month or so, but I would review their financials and thesis, and when it was looking at the strongest position, I would buy some more. I started in November 2021 with a small position, and a few months later, when the discussions about the semiconductor shortage was starting, I placed a larger position, $1,000. Then, occasionally, I would invest $500, $600, $1,000 with a total investment value of around $4,000. From the time I started when the time I sold it in November 2024, my total position was worth almost $24,000. What was my secret here? I simply kept buying. I kept the position for more than 4 years. I was monitoring the company. I could see its potential and dominance in the market, and the AI hype made the perfect environment for this to grow. So, I had positioned myself perfectly to make the most out of my investment. What did I do with these funds? Around $10,000 went back into Nvidia. I still believe it is a major player in AI, computing, and tech, and will remain an industry leader for the long term. The day I am writing this, the market is taking a big drop due to the DeepSeek application, which is causing concerns over the big spend on AI. Essentially, China is showing that they can build the same AI models with much less computing power, and that makes the US investors skeptical over the big investments in AI and its actual cost. Nevertheless, they haven't actually proved anything, and I believe the market is overreacting, so for now, at least, my position remains the same. Actually, I am using this dip as a buying opportunity, as I have been doing all the last few years, and with this tactic, I was able to build a portfolio of $100,000 from zero. So the day Nvidia dropped 17%, I placed another $1,000. With the rest of the money, I made a couple more investments. Another $10,000 went into IDTL ETF. This ETF is a great investment for anyone betting that the US economy will stabilize and interest rates will fall soon, and I believe it is just a matter of time when this will happen. Right now, short-term bond yields are higher than long-term yields, reflecting a pessimistic economic outlook. This situation is called a yield curve inversion, typically resolves when central banks cut rates to stimulate the economy. When this happens, long-term bond prices rise, benefiting this ETF. Additionally, it provides a dividend yield of over 4%, offering passive income while waiting for the market to shift. However, its success relies heavily on the assumption that interest rates will decline significantly in the near future. Finally, I allocated the remaining $3,000 to Walmart. If you are not following Walmart, it's not just a grocery store. It's actually a tech company investing heavily in their online experience. It's not a coincidence that they have moved their tech offices to California with all the major tech companies, and their CTO is ex-Amazon, ex-Microsoft, and ex-Google. In fact, Walmart's eShop is competing directly with Amazon, and they are growing their market share rapidly. Above everything else, it is also a stable business with high margins, and I consider it a buy-and-hold company. Another investment that returned my capital multiple times was AppLovin. I spoke about it briefly in my previous video too. I made a one-off buy, spending less than $900 when the share was $73. I knew this was risky, so I didn't want to make a larger investment there. This company got a lot of hype by the AI frenzy, and I was at the right time in the right place for this. On top of that, they delivered powerful earnings, showing strong performance in the market, and investors loved it. With the AI hype and the strong earnings, it gained momentum, and the stock rallied over 600% in 2024, making it one of the best performing tech stocks of the year. I exited the position with a $3,000 profit, and I placed the capital into other investments. The next one is not similar to the previous two cases, but it is how most of my portfolio works, with steady growth and consistency. My favorite example of this approach is my position at JP Morgan. In fact, it has been one of my favorites, and I will keep it for a long time. My first buy was in 2023 at $153. Then I made a couple more at $198 and $184. I am up around 65%, and it is a hold for me right now. I might add more in the future, but I will wait for a dip, even for a small one. It is a predictable bank with steady growth and well established in the market, with robust balance sheets, making it one of the strongest companies in the US. Now let's take a look at two of my recent positions, where I am betting on growing a lot in the future. The first one is IONC. It is a quantum computing company and one of the first listed on the stock market. This is more of a risk rather than a very sophisticated investment, but it follows a hype that was created recently by Google on quantum computers and moved on by seeing big companies like Nvidia investing in quantum tech. So, IonQ could be a bubble going to $0 or an attractive investment with a strong upside. In any case, I can afford this bet, and for this reason, I have placed around $2,000 for the time being, and I am watching it. My second bet is ASML. In fact, as I am writing this episode is 7% down, and I just invested another $1,000. The company is one of the key players in creating semiconductors, leading the market with almost a monopoly. Although it is part of the AI hype, their main buyers use semiconductors in their electronic devices. So even if DeepSeek proves that generative AI is a bubble, ASML will continue to have the same customer demand and growth potential. A quick look at their financials shows they have a healthy ratio between their assets and liabilities. This is called the current ratio and is one of the main criteria Warren Buffett uses when he evaluates a company. They also have a competitive gross profit and an upward trend in their revenue. ASML is expected to grow its earnings, and I am setting a long-term position, looking to get a lot of multiples back in the next 2 or 3 years. Overall, the demand for semiconductors will remain high. Even if this AI craze is a bubble, which I believe it is not, cars, washing machines, TVs will keep becoming smarter, and the demand for semiconductors will still be there. In the following episodes, I will go through my criteria for picking stocks and what stocks I am watching, and I will be looking into cryptos a bit. Thank you and have a great rest of the day.